Where do you see the most opportunity in E&P? Because we like to lump them together because of ETFs, but they're not. They're very different companies.
Yeah, I think we're really excited about the mid-cap E&P space because we think there's a real sweet spot for them to deliver the growth that we believe the U.S. sorely needs. When you look at inventories of refined products and crude oil down sharply, and you've seen real cartel-like behavior from the large caps who are really focused on excessive or aggressive cash return to shareholders. This is that Goldilocks setup we talked about in our notes for well-capitalized and mid-caps to grow and be a true growth and income story.
Yeah, and I'm looking at some of the names. I mean, Diamondback. They talked about it, by the way, Stephanie Link talked about it with Scott in the halftime report. They're just kicking off money. They're doing their buyback, raising it by something like 18%. Free cash flow continues to be up. Travis Stice and his team there doing a great job by most measures. You like them, and yet stocks down today. The oil stocks really haven't done anything for a couple. Had a red-hot start to the year, but then they've just cooled off. How come?
Well, I think the risk-off trade from recession fears, and then there's a China lockdown du jour that's weighing on sentiment. And I think if you look at some of the other agencies out there that are putting forecasts for U.S. oil production growth, they've been really aggressive and, in our view, extremely wrong. We think U.S. oil production will continue to come in below kind of numbers that have been thrown out there by the big think tanks. There's just no really will or incentive, aside from Chevron and Exxon, who we don't cover. They are growing like gangbusters in the Permian, but other than that, we simply don't see the growth that's there. So that's the disconnect that we see. And it's this recession risk off that's really weighed on these stocks that ignored the fundamentals in both oil and natural gas that we think are very favorable.
Yeah, and a lot of these companies have merged or they've changed names, one of these fancy names, like Verizon, what was that? Civitas, Silverbow, who are they?
Yeah, well, Civitas is essentially an aggregation of 6 smaller Colorado operators. You had a firm, Kimmeridge Energy, came in and they spearheaded real, aggregation and consolidation in the play. And they are driving, this is the model of what they're trying to put forward as a new normal for E&Ps. Unlike the large caps, they're trying to push this model into the mid-cap space of very low growth and robust capital returns. So this is a mid-cap essentially mimicking what's been the theme du jour of the large caps. And lastly, Silverbow, they were a company that came out of restructuring in 2017. What's very exciting about them, they are a pure play bet on the dry gas area of the Eagle Ford Shale. We know that play. We've known it for a decade because of prolific oil production. There are some really high-quality pockets of 100% natural gas that these very profitable wells. EOG's been talking about it quite a bit, and Silverbow is really the pure play way to play that.
Tim Rezvan, KeyBanc Capital Markets. Tim, pleasure to get you on. Thank you very much.
Thanks, Brian.
Shepard Smith here. Thanks for watching CNBC on YouTube.